This is Josh with Star Valley Capital. Star Valley Capital is my proprietary trading firm. It's just me right now, and it's me manually trading, and it's me exploring automated trading and backtesting. So the main way that I was exploring automated trading and backtesting was through the development of a product called Warren. Uh, there's a video before this one that shows what my original vision was with Warren. And that video is worth watching first because you can see the difference between the vision and uh, what was available to be done practically. So there's a little bit of a little bit of a delta there. But the idea was that manually backtesting trading strategies takes a lot of time. It's really easy to make mistakes, and you do it, in Excel or Google Sheets or something like that, and it's just all manual and it's tedious. Um, so, in solving this problem right here, the end product of Warren does actually a pretty good job. So, we will actually go over to how Warren ended up. So Warren, uh, this is a dashboard for just to level set with everyone here. This is a dashboard for uh, automated back testing of trading strategies. And trading strategies meaning combinations of different trading algorithms when it comes to trade entry, profit targets, and stop loss. So the first thing I want to bring everyone's attention to is that this is kind of minor, but it's cool. Warren has three different color modes. So we've got retro green terminal, we've got the retro amber terminal from way back, and then we've just got white on dark dark gray right here. So in order to configure a back test, I've got all these boxes hidden right now because they contain a ton of different um, parameters that are tweaked for a back test. So we'll go through them one at a time. Market data settings are where we decide what instrument are we going to test. In the system, we only have SPY data. We've got, I think, six years of SPY data in here, and that's at the 1 minute and the 1 second interval. And so over here, the user can switch between seconds and minutes. Uh, Seconds takes, as you might imagine, for 6 or 7 years, quite a long time to test. So we will stay in the minutes area, and the 5 minute chart is really where I like to stay at as a trader. So we'll test 5 minutes. Start date and end date. You can see the available data here. So we have data going all the way back to May of 2018, and then our test data ends December 16 of last year. So for the purpose of brevity, we will just test kind of almost a full year of data. Your start data time for Warren is when the system starts keeping track of things it's supposed to keep track of. Your start trading time is the interval window where the system is allowed to take a trade. So if the system is looking for a signal, it starts looking for a signal here at start data time, which is 9:30, which is market open time. And if it finds a signal, it'll trade. It'll initiate a trade. And if you look at the end trading time, then although it's tracking what's going on past 2:30 p.m., after this is the cutoff and it won't take a trade after this. So what this allows you to do is this allows you to kind of narrow the band of trading within a session to see if your algorithm performs any better um, when if you basically squeeze the time window of when it's allowed to operate. And by the way, this does affect profitability. in some of the algorithms that we've run here. We've got some quick time filters here. So if I hit pre-market, then it resets the data time and the trading time to pre-market. Go back to market hours. It resets both of them to market hours. We'll go back to 1430 on here for when we run our algorithm. So this is the market data settings for the dashboard. When you're done, this button right here allows you to just fill in defaults. But when you're done, you can collapse it, so it's not distracting you. So we'll uncollapse risk management settings now, and we'll go through that a little bit. Risk management allows you to decide what your simulated account is going to start with. We start with $50,000, which is what a lot of prop firms do. Maximum risk per trade is exactly what it says it is. So the system will not take a trade that risks more than 150. Slippage not included. Slippage right here, you can set it on a slider. There's even a slider for a minimum reward to risk ratio. So if you have an algorithm and you want to avoid ridiculous reward to risk ratios like 0.1 to 1 or something like that, you can filter them out right here. So we'll go ahead and set ours to 0.1 to 1. So this is risking 1 to make 0.1, so it's not going to do anything worse than this when we run the backtest. Daily loss limit is exactly what it says it is. You can define how much you want to lose in a day before the system says, I'm not trading anymore, we'll wait for the next session. Trade direction allows you to filter between making sure the algorithm either only takes longs, shorts. We leave it on both. This is margins for shorting. Reserve cash. This is all like risk management settings that basically they try to approximate how realistically this algorithm would perform if it was actually trading real money for you. Same with leverage, another very common risk management policy in trading accounts. Trailing stop. So this, if enabled, once you are in profit, this will automatically start trailing the stop. So to basically, this is a strategy that a lot of people use once they're in profit. They start trailing the stop so that the trade doesn't turn around and stop them out for everything. So you can enable or disable trailing stop, and you can choose how many candles behind where price currently is the trail goes. So that's pretty useful. So that's risk management in a nutshell. We'll collapse that so it's not distracting us, and we'll go to signal algorithms. So we'll be testing the pullback entry signal algorithm. And to describe that algorithm, it's pretty simple for people to execute, but it's a little bit more difficult for computers to do it. Basically, the idea is that when there is a new high or low of day made, then you start to count the pullbacks and the breakouts from the pullbacks. And if a third pullback is made, let's see here, yeah, so we currently have our setting at 3. So if a third pullback is made with is broken out from without making a new high or low of day, then we take that trade in the direction of whichever extreme was more recent. So if the high of day was more recent, then we take that in a long direction back toward the high of day. It's a very simple overview of the algorithm. Was experimenting around with just reversing the logic here. So that's an option. There's bandpass filters, which for this algorithm specifically, which means if the algorithm is too high is too close to the high of day, then you could filter that out. I did a lot of experimenting with band filters and found that they did change the profitability of an algorithm. You can also add filters, so indicators. So right now we have an ADX, ATR, VWAP, and a momentum indicator. So sometimes indicators also help. So you can test indicators out. So we've got this setting right here. So the way this system works is that the, and actually, I'll just keep running through the settings, and then we'll talk a little bit about the architecture and how things run, and everything's running locally in Docker right now. So we'll talk about this in a second. So you configure your signal algorithm, which decides if you get into a trade or not. That's all it does. Your stop loss algorithm decides where your stop loss is if your signal algorithm fires a signal and gets you into a trade. Um, so if we look at this, we've got a few different algorithms I programmed into here. I will just pick an easy one, which is, let's see here, numbered. Okay, so numbered MDP stop loss. MDP stands for market data point, and a market data point is just a candle. We call them MDPs in the system because the system doesn't see them as candles. The system sees them as just a series of numbers: open, high, low, close, volume. So whenever you see MDP, just think candle as a human trader. So this is numbered candle stop loss, which means on the entry, if this is set to 1, then this will go 1 candle back, and that's where your stop loss will be. This is a very common strategy for trading, to use a stop loss that is 1 candle back. So we've got that set. And then the final algorithm that you need to configure is the take profit algorithm. And the take profit, this is just tells the computer where you want to take profit. You can even allocate some part of your position to different profit levels. So if the double top, double bottom is your profit, then you're going for you're expecting that price will hit if you're trading in the direction back up to the high of day, then you're expecting that price will hit high of day, and that's where you'll take your profit. And what this does is this says, okay, well, we'll take 75% of our profit at 100% our distance to target. So that is a true double top or double bottom. And once we're 75%, then we will take 25. Well, once we're 75% of the way to our double top, for example, which is where we're targeting, we'll take 25% of profit. So you can even allocate profit kind of all along. You can take a profit along the way to your true profit goal. All right. So saved backtests is just where your backtest gets saved, and you can load from there. And we'll talk about that in a second. But first, I want to just run it, and I want to show you what happens when you run a backtest in this system. Okay, so as you can see, it goes through all the steps. It's processing the market data. It's calculating the metrics of that data. It's processing the algorithms now, and it's simulating trades, and then it's already done before I could even talk through everything. So here's what happens when you run a backtest. First of all, you know right away what happened. Um, so this white line represents what would have happened in 2025 if you had just bought and hold. So if you had bought um, an amount of SPY and you had held, this white line would be the journey of your money. This right here represents tariffs that occurred in I think April or something like that. I think it was April. These are the Trump tariffs, and this is the pretty sharp recovery after those tariffs. Now, this green line is how your algorithm would your the way you've configured everything exactly would have performed in the market. So as you can see, this algorithm was very resilient to massive moves in the market. So this tariff dip would really not have affected you at all. It would have kind of put you in a little bit of a drawdown right here, but then you would have, as soon as this starts recovering, you'd start paralleling it a little bit. So kind of an interesting result. 14.3% still underperformed the market by 1%. So not a golden ticket algorithm by any means, but certainly a starting point if you wanted to manually trade this strategy and you wanted to make it your own strategy. You would at least have some indication of where you'd be going with this. So you get a ton of stats, and all of these. You get Sharp ratio, your Sortino, your Calmar, your starting balance, your ending balance, how much you actually made. 14% is $7,000 profit. Um, how many trades that was? You had 334 trades in a year. That's a little bit more than in one trade a day. Your win rate was 40%. So at one point you lost 9 times in a row, which is very difficult psychologically to go through. But at one point you also won 5 times in a row. Your average reward to risk with this strategy was 2.89, so 3 to 1 basically. Your lowest was 0.26 to 1, and we had a filter on here to filter out anything less than that. So there probably were some even worse reward to risk ratio trades that were not even traded because of our filter. And then one day you just had a really crazy 22 to 1 reward to risk ratio. So that was really a great day. And that day was probably, probably this day right here. It's one of these huge jumps up was that reward to risk ratio right there. So some more stats. I don't have time to go through all these. Here's some market data metrics. Okay, so we looked at how trading performed, and basically it was okay. The algorithm, the way that was configured was okay. Look at market data metrics. This just tells you about the market data that you tested. So this doesn't tell you about the trades. This just gives you metrics on the data itself. So there's 240 trading days. There were 19,000 candles, also called market data points. There were 51% of those candles were bull, 48% bear, so slightly bullish. Makes sense, I guess, since the line did go up. Let's see what else we got here. Some volume statistics. Highest volume on SPY was 3 million shares on one of those candles. Just a ton of, if you're a quant, a true quant, just a ton of numbers that you can dive deeper into for your own models. Okay, so that's market data metrics. Onto sampled candlestick charts. So this was really the best way that I had for myself to test if the algorithms were executing correctly. So this is for the user to show the user that how the algorithms actually execute, and allows the user to basically evaluate whether it's accurate. This was absolutely necessary for me to figure out, to have this visual to know whether the system was working correctly or not. So it just samples 10 days from the data that was tested, 10 random days. And for example, this algorithm, like I explained earlier, depends on knowing what the most recent high of day and low of day is, and the algorithm depends on knowing which one of those is more recent. So every time a new low a day was made, you get a star. Every time a new high a day was made, you get a star on the other side. So this is how the system keeps track of all the highs and lows of days made. And these are the pullback counts. So we can see right here, new high of day, the first pullback, and then it ended because this candle went above the high of this one. So that's the first pullback. Then the second pullback happened, and the second pullback ended because this candle went higher than this one. Then the third pullback started. And because we were trading a third pullback, this triangle right here, where my cursor is, represents our entry into the trade. And because our stop loss algorithm was the bar before our entry one, the stop loss was down here at the bottom. So you can see the X is the stop loss, the triangle is the entry, and the diamond are our profit targets. So remember, we had two profit targets. 75% of the position is out at 100% of the target, and 25% of the position is out at 75% away the target. So just by looking at these charts, I can see that the system executed this algorithm correctly. And so this is how I tested to make sure. I mean, I did a lot of visual testing to make sure that the system was accurately going through the algorithm and executing the way that I understood the logic should be. And then at the end, we have a log of every trade that it took. We have a log of how long it was in a trade for, the direction, where it entered, where it exited, how many shares it traded, its position size, and then its P&L. And then the result. So a lot of times you're going to get a stop loss hit or the take profit hit. Every once in a while, and we'll see it. We'll see if we have any here. You'll get that the day ended. Probably none here because probably there's going to be no results of day ended because up here in market data settings, we cut off trading at 2:30, meaning the system did not take a trade after 2:30. So the chances of a trade lasting 2 hours into the end of market are probably pretty low. So that's probably why we don't see any day-ended results. So that is what Warren ended up being in a nutshell. And I want to talk a little bit about saved backtests. So we can see that this test that we just ran with 14% return, it just saved in the database, in the Postgres database that we have. And what's cool about this is that we can go back and look at the tests that we ran. See, most of them are not very exciting, 6%, 13% return. Some of them are negative, but there was one that was kind of interesting at 37% that I ran about a month ago. So we'll load that one. And what's cool about that is that when you load a saved backtest, it actually loads the exact way that backtest was configured in every single one of these panels. So that if you want to experiment to try to get more return out of that strategy, everything's already set to the way it was for the return. And now you can just fine tune things. So that saves people a ton of time in tuning algorithms. So we can see that this return, actually, this particular configuration was way better than market return. So this one was kind of promising. And I believe this was the pullback entry. Let's see what the signal algorithm is. Pullback entry. And it was the third pullback entry. And I'm curious what the stop loss was. So so that's that. So you can go back and you can look in the system at historical backtests you ran and kind of retune from where those backtests left off. So very useful. Let's talk a little bit about the back end. That's less exciting, I know, than the front end, which is where all the magic kind of gets put together. But all the magic really happens in the back end. So this is a service architecture, microservice, whatever you want to call it, service architecture. So you're really just looking at one service, which is the dashboard. And these other services are what come together to give the dashboard the experience that I just showed you. So what the dashboard does is it will publish information to Kafka. And for example, the market data manager service subscribes to what the dashboard publishes to Kafka, and that triggers. And when the dashboard publishes a backtest request to Kafka, the market data manager then goes and does its thing. It goes and fetches the data, and then it publishes the data to Kafka, And the market data metrics service says, well, I'm interested in market data because I want to run metrics on it. So it waits for the market data manager to publish market data to Kafka, and it does its things. And then after that, the algorithm service subscribes to the market data manager as well, runs through, and it produces potential trades that it gives to see where that service, to the trade simulator. So algorithms gives its opinion on what the trade should be to the trade simulator, and the trade simulator actually runs the trades. The trade metrics actually grabs metrics on the trades that were run through the trade simulator, and then all that stuff, the trade metrics and the market data metrics, and the trade log is also in the trade simulator. So the trade log, the trade metrics, the market data metrics, all this stuff publishes to Kafka, and the dashboard subscribes to that, and that's how you see these final results. So that, in a very quick overview, is the way the system actually works in the back end. So going from there, the question is, what's next? So this system has served its purpose. And so the question that I wanted I had a very strong hypothesis that certain algorithms could be profitably traded in an automated way. And I used this system to confirm or to test that hypothesis. And what I found is that if you're a profitable human trader, you're going to outperform every single automated algorithm that I tested here. So where the system succeeded was that it proved that some automated algorithms are potentially profitable. But what it does is it provides a very good starting point for someone to manually trade an algorithm. They can kind of run their algorithm through this very fast and get some reasonable idea as to whether their algorithm is at least a little bit profitable. Because if it's just a little bit profitable, it's 10, 20% return, that can be improved on through trade management. So that is the one kind of weak point of this system, is there's not really much in here for trade management. So with that said, this project is now winding down. So this was a 6 months. I've been working on this project. Today is basically the end of February 2026. I've been working on this project since August of 2025. It ran its course. It answered my questions, and I went ahead and just open sourced it on GitHub. So you can actually look at my GitHub, and you can look at all the source code for this system. And you can even clone it and use it yourself. So originally, the system was a little bit more ambitious than that. So there was all these monetization strategies that I had in mind, and these things are not dead. They may still happen, but I have an idea for, I think, a better tool for trading that I'm going to be pursuing here shortly. So the phase one of the project was the core backtesting engine. That was at the time these slides were made, that was in progress. That's complete after really 2 or 3 architectural redesigns due to unforeseen problems, but that was complete. We did not go live with an algorithmic trading bot because I think that agents may be better suited for this. So instead of programming a deterministic dumb bot, basically, I think I'm going to use an agent in the future to try to experiment with automated algorithmic trading. Let's see. So the project schedule originally was this. Um, so around early Q1 2026, the core backtesting engine closed out, and all these other are OBE. I'm not worried about these right now. So I got the core back testing engine and user interface done, and it answered a lot of. It didn't give me the answers that I wanted to my questions, but it did give me the answers to my questions, and that itself was extremely valuable. And the answer to the question, by the way, is that bot trading is really hard, and you're probably better off human trading. And when human trades, they need to manage their trade. That's the whole answer to the question here. Although I'm not giving up totally on bot trading, it's just that bot trading is, I think, significantly more difficult than a human trading. 'Cause humans can just make way more decisions with new information. This was the original architecture, as you can see in Docker. Whoops, clicked on calculator. As you can see in Docker, um, this uh, this is this was the final architecture of the system. So not super different from the original architecture, but different enough. This was originally this was a sequence diagram. There's a ton of sequence diagrams that you can go look at now in the open source repo. This was where we were. Warren was deployed. So I took Warren off Railway and just run it locally now because it was costing me money for cloud compute for no reason. Nobody was using it but me. So it just seemed stupid to keep paying Railway when I can just run it locally on my computer. Backtesting engine is complete. Microservices do communicate with each other now via Kafka. So um, that's Warren, and and that's about 6 months of work. And although it did not, although the end result was not something wasn't what I was really hoping for. Let me just say what I was really hoping for was a golden ticket proprietary trading algorithm that I could stick a bot on, and that bot would just print money. Um, as much as everyone who does stuff like this hopes for something like that, that is really hard to do. And building Warren proved to me that there are still some pieces missing in the way that I'm thinking about automated trading. And the question is, what's next? So, what's next for me, I believe, is I'm going to try to build an indicator that looks at what the charts are currently doing and goes back in time to find a chart to find the most similar chart to what the chart is doing right now to try to predict how the current chart might turn out. I don't know if that is the golden ticket. It will certainly be a lot less work than Warren will be. It'll be a lot simpler, although it will involve machine learning, but um, where Warren did not. But that is where my next step is. And I may come back to Warren at some point if I'm struck with a new idea that I want to test out. But the basic conclusion of this system is that the algorithms that I have in there right now just are not super profitable when they are traded without intuition. So human trades them, they may be good. They're good for me sometimes when I trade them. But for a computer that depends completely on deterministic rules for trading, these algorithms are not very well suited for that. So that's where we are on Warren. Warren is basically project closed. I'm not deleting it, or I'm going to keep it, on GitHub and stuff like that. But it was an interesting journey into trading, into automated backtesting and trading. And if I was to build another system, I've already ran into. I remember all the problems that I ran into the first time, so the second time would be much easier and faster to stand up. If you are interested in Warren, if you would actually like me to test an algorithm that you have, then you should reach out to me. I'd be happy to talk about putting your algorithms, your strategy into the system and testing it. And we don't have to test on SPY. We can test on any instrument that you want. Um, and there's a few ways you can get a hold of me. My email is josh@starvalley.dev. Um, I'm on Discord sometimes, not super often, but my number is uh, actually that number is probably expired, so I'll have to get that. Just reach out to me via email. That's really probably the best way to get a hold of me. That's josh@starvalley.dev. Thanks for watching, and I hope you have a great day.